What day is it? What day is it, Mike? It's Hump Day on the National Real Estate Cafe with Don Gatling and Gino Fronti. Couldn't help myself.
We're probably going to end up having to pay rights for that since it's like the third time in a row we've used it now.
No, it isn't. Anyway, so today we're going to go over what's really happening in the economy this week, as we always do. Hump Day is a good day to do that. So we'll start off with this first slide, which is the Small Business Optimism Index for February. This kind of gives us a pretty good gauge on how the small businesses feel about hiring, firing, growing, all that good stuff.
What I like about this report, Don, is that it's measuring something not a lot of people read this report. It's not one of the big mainstream reports, but we think it's critically important because it tells us what's going to happen with jobs.
That's right. So even with the bad weather, we've actually have a pretty good report. The report is the third best levels we have seen since 2008. And what's nice is the areas that it's growing in is current job openings is the main one. That's what they're thinking, that they're going to grow jobs.
Yeah, I think what I like about it, Don, is that we're going to continue to see job growth. And if this was what we had during bad weather, the spring should show really nice numbers.
No doubt about it. So overall, pretty good optimism. So the next slide here, here's another report that came out. CoreLogic released their foreclosure report. Why are we even talking about foreclosures?
They're dissipating to almost nothing. In fact, what's really nice is they're back to normal levels. There will always be some normal level of foreclosure due to regular job loss, death, divorce, etc.
Yeah, no doubt. So the good news is we're down a third from last year's foreclosure report, which was probably down a third from the previous year. So we're down to 1.4% of all homes. And clink, that's our coffee cups, the Don and Gino coffee cups. And what's nice is additionally 4% of all homes are in delinquency, like high, we're talking 90 days or more late, right?
Yeah, so this is 1/3 the delinquency levels we had during the foreclosure boom, bust, I should call it, and less than a quarter of the foreclosures we had. So we're in a really good real estate space right now.
All right, so here's another report, though. If you watch us on a daily basis, remember, the National Real Estate Cafe is a daily blog. We've been warning you that we felt that there was going to be a correction by the stock market, that they were up against some heavy resistance, one of the highest levels they've ever been at, and that they're going to probably correct. And if the stock market corrects, then we're going to see interest rates improve. So here's the S&P index. Uh-oh, the red line's not good. That's a sell-off. We told you.
The good news is the money flowed right into bonds. Check out this slide right here where the money went right into bonds, right after the buying opportunity. You see the large red candle is a buying opportunity for bond investors. Sure enough, they came in, snapped them up, and that's a good sign for interest rates going forward.
No doubt about it. So if you paid attention, you would have known that this was going to happen. So good news is rates should start improving a little bit, or lowering, if that's what you want to call it. So make sure you tune in daily to the National Real Estate Cafe with Don Gatling and Gino Fronti to see what's brewing.